Just check whether we are live now. Yes, I think we are live now. Indeed, a warm welcome to one and all. I, CA Pratik Nave, welcome all of you to Zest Learning. Friends, how are you all doing? I hope you all are doing wonderfully well. This session we are taking up for covering amendments which were done by Finance Act 2024. So Finance Act 2024 proposed few amendments that are applicable for, as you know, assessment year 25-26, that is relevant to previous year 24-25. So friends, if you are new to the channel, the request would be subscribe to the channel and hit the bell icon so that you will not miss out on any such important videos, and you will get notification of each and everything that we do on this channel. It's academically very important for each one of you. So let's not waste our time. Let us start with amendments. So friends, as you know, Finance Act always proposes the rates of income tax for the upcoming financial year. So Finance Act 2024 proposed the rates for PY 24-25, that is AY 25-26. So shall we discuss what are the rates of income tax? Now you know there is a default tax regime that is of section 115 BAC. So in this 115 BAC, what are the rates of tax? Our focus mainly is on individual. Okay, so let it be resident or non-resident assessee. What are the rates of income tax? If my income is up to rupees 3 lakhs, there is no tax. So how to remember? 0 to 3 lakh, no tax. 3 lakh to 7 lakh, tax is at 5%. See, 0 to 3, 3 to 7, 7 to 10, 10 to 12, 12 to 15, and above 15. Getting it? So 0 to 3 lakhs, no tax. 3 lakh to 7 lakh, 5%. 7 lakh to 10 lakh, 10%. 10 lakh to 12 lakh, 15%. 12 lakh to 15 lakh, 20%. And finally, above 15 lakhs, tax at 30%. Clear, all of you? Now discussing about rebate. Rebate means discount. You all know. So this rebate under 87A is now available under 115 BAC to what extent? It is available to the extent of rupees 25,000. Getting it? It is available to the extent of rupees 25,000. So tax payable or 25,000, whichever is low, that will be the rebate available. Okay, many questions coming up, okay, on all these issues. So please stay tuned till the end, watch the video till the end, and the notes of this are given to you in the description of this video. Okay, so talking about surcharge on tax. Okay, so surcharge, if your income is between 50 lakh to 1 CR, surcharge is at what percent? 10. If your income is between 1 CR to 2 CR, surcharge is at 15%. And if your income exceeds 2 CR, surcharge is at, yes, 25%. What you should understand, okay, that this surcharge is subject to marginal relief. We will see a question on that. Apart from that, in case your total income includes dividend, then your incomes which are chargeable under 111A, that is STCG on listed shares, or LTCG of 112, or 112A LTCG, that is LTCG on transfer of listed shares. In this three cases, okay, that is dividend 111A, 112 and 112A, the tax on this is chargeable, you know, at special rates. So on this, surcharge is also restricted to 15%. Surcharge cannot exceed 15%. So even if your total income exceeds 2 CR, then also, surcharge on these incomes will be at 15%. Remember, clear? And of course, that tax plus surcharge will be increased by health and education cess at 4%. Now, what are the rates of tax under old regime? So under old regime means when you are going out of section 115 BAC, then what are the rates of such tax? So you have to first remember in that basic exemption limit. So if you are a resident senior citizen, means age is 60 or more than 60. When 60 or more than 60 in the PY, then the basic exemption limit is rupees 3 lakhs. Means no tax on first 3 lakhs. If you are resident super senior citizen means age is 80 or more than 80 in the PY. Then friends, 0 to 5 lakhs, there is no tax. And finally, in case of any other individual means who is either NR, who is either a non-resident, or who is such a resident whose age is less than 60, then the basic exemption limit is 2.5 lakhs. Clear? Now what are the slabs? 0 to 2.5 lakhs, no tax. 2.5 lakhs to 5 lakhs, whatever income falls between this range, tax is at 5%. Income between 5 lakh to 10 lakh, tax is at, yes, 20%. And income above 10 lakhs, tax is at 30%. Let us quickly again recollect. 0 to 2.5, no tax. 2.5 to 5, tax at 5%. 5 lakh to 10 lakh, tax at 20%. And finally, above 10 lakhs, tax is at 30%. Now, how to incorporate these slabs if I am a resident senior citizen? Then no problem. 0 to 3 lakhs, no tax. 3 to 5 lakhs, 5%. And rest of it continues same. Similarly, if you are a resident super senior citizen, 0 to 5 lakhs, no tax. 5 lakhs to 10 lakhs, 20%. Above 10 lakhs, 30%. Clear? Then going ahead for rebate. In this, when you opt out of 115 BAC also, there is an rebate. How much rebate is there? Rebate is there to the extent of 12,500 or tax payable, whichever is lower. Getting my point? Another thing, this rebate is applicable when total income is not exceeding 5 lakhs. Mind you, when you are in 115 BAC, rebate is applicable if total income is not exceeding 7 lakhs. Here it is applicable if total income is not exceeding 5 lakh. Rebate in 115 BAC is to the extent of 25,000. Here rebate is to the extent of 12,500. So I hope these all things you have understood. Now when I talk about surcharge, in this, when you're opting out of 115 BAC, the surcharge is absolutely same till this point. Till this point it is same as in 115 BAC. So if your income exceeds 50 lakh but does not exceed 1 CR, it is at 10%. If income exceeds 1 CR but does not exceed 2 CR, it is at 15%. And when income exceeds 2 CR but does not exceed 5 CR, it is at 25%. And when income exceeds 5 CR, it goes to 37%. So as you know, in 115 BAC, the rates of tax are comparatively less. So even surcharge is less. Clear? Because there is no surcharge of 37% in 115 BAC. So remember this point absolutely carefully. Going ahead, Again, same thing. In your income, if you are having dividend, STCG of 111A, LTCG of 112A, then on these incomes, means on the tax on these incomes, surcharge will be restricted to 15%. Clear, all of you? And further, of course, tax and surcharge will be increased by health and education cess of 4%. Going ahead, for partnership firm or LLP, the rate of tax has not changed in many years. It continues at 30% flat, and surcharge is at 12% if total income exceeds 1 CR. Clear? And of course, tax plus surcharge will be increased by health and education cess at 4%. When I talk about company, friends, when I talk about company, then for domestic company, the rate of tax is 25%. For domestic company, the rate of tax is 25% if its turnover in last to last financial year. Now, last to last financial year means what? See, here we are discussing for 24-25 the rates. So leave 23-24. I'm talking about 22-23. If your turnover in 22-23 is not exceeding 400 crores, then your rate of tax for company is 25%. And of course, if it exceeds 400 CR in 22-23, then it is 30%. Clear? And for foreign companies, there is a change, friends. Earlier it was 40%. Now for foreign companies, the rates of tax in AY 25-26 is going to be 35%. I hope it is absolutely clear to all of you till this point. Yes or no? Yes, sir. It is absolutely clear till this point. Let's go ahead. Surcharge. For companies, when I talk about domestic company, surcharge will be applicable at 7% if total income is between 1 CR to 10 CR. If total income exceeds 10 CR, surcharge will be at 12%. Okay. For foreign company, the surcharge will be at 2% if total income is between 1 CR to 10 CR. If total income exceeds 10 CR, surcharge will be at 5%. Okay. And of course, increase it by 4%, health and education cess. Now friends, coming to the unique point in this session, that is each and every amendment is covered with example. So coming to example number 1. There is Mr. Gupta whose age is 61, means friends, resident senior citizen. Under default tax regime, you have to calculate his liability. So friends, in default tax regime, anyways, age doesn't matter. He is having total income of 1 crore 2 lakhs. Something clicks to you. 1 crore 2 lakhs means it just exceeds 1 crore. When it just exceeds 1 crore, there is going to be surcharge at 15%. Yes, sir. There might be concept of marginal relief that may attract. So remember, each and every example I have taken is of highest, level. So focus, many things to be understood. And his income has salary income, HP income, interest on FD. Now, first step, you calculate tax on 1 crore 2 lakhs. I hope all of you are sitting with calculators. How will you calculate on 1 crore 2 lakhs? It doesn't matter. Age is 60. We are calculating as per 115 BAC. So what will you do? 0 to 3 lakh, no tax. 3 lakh to 7 lakh. Between 3 lakh to 7 lakh, you have got 4 lakh. On that 4 lakh, calculate at 5%. Check. You are getting 20,000. Between 7 lakh to 10 lakh, you have got 3 lakh. on that 3 lakh, calculate at 10%. Between 10 lakh to 12 lakh, you have got 2 lakh, on that 2 lakh, calculate at 15%. Between 12 lakh to 15 lakh, you have got 3 lakh, on that 3 lakh, calculate at 20%. Now friends, check, your total income is 1 crore 2 lakhs. So now do 1 crore 2 lakhs minus 15 lakhs. That means how much exceeds 15 lakhs? 87 lakhs. So on 87 lakh, calculate at 30%. Check. Are you getting 26 lakh 10,000? Take on your calci 26 lakh 10,000 plus 20,000 plus 30,000 plus 30,000 plus 60,000. You are going to get 27 lakh 50,000. On this, you add surcharge at 15%. You know why it is 15%. So how will you do it? 27 lakh 50,000 into 15%. So you must get 4 lakh 12,500. So please now go ahead and get your liability. Your liability is going to be 31 lakh 62,500. Are you all getting 31 lakh 62,500 as your liability? Yes. This is a liability including surcharge. This is your answer of A step. But mind you, this is not your final answer. Why so? For simple reason, your income just exceeds 1 CR. So what if your income was exact 1 CR? If your income was exact 1 CR, how much would have been your liability? Simple. First 15 lakhs, so liability remains 1 lakh 40,000. You can check. Above 15 lakhs, there is 85 lakhs. On 85 lakhs, you calculate at 30%. So 85 lakhs into 30%, 25 lakh 50,000 plus 1 lakh 40,000 on first 15 lakhs, you get 26 lakh 90,000. Since your income is exact 1 CR, surcharge would be at 10%. So friends, 26 lakh 90,000 into 10%, you will get 2 lakh 69,000. Take total, you will get 29 lakh 59,000. Now, in this 2959, even if you are ready to pay full 2 lakh rupees, that is which exceeds your 1 CR, still your liability will be 31 lakh 59,000. But calculating on 1 crore 2 lakhs, it is 31 lakh 62,500. So government says don't take tension. Government says don't take tension. Go ahead and pay whichever is lower. So your tax liability can be accepted at 31 lakh 59,000. Clear? Being lower of A and this. Whatever. We have called it as B and yes, C. So being lower of this B and C. Is it clear? Now on that, you calculate health and education cess at 4%. And that's it. That will give you the tax liability. So 31 lakh 59,000 plus 4%, 32 lakh 85,360 will be your liability. So friends, with this example, we have covered the concept of marginal relief also, and we could cover the slabs also of 115 BAC, and we could cover surcharge also. So many concepts getting covered in a single example. Okay, going ahead, another illustration. Check why I have covered this illustration. There is Mr. R, means individual, age 26, resident in India, total income 6,50,000, and having salary, interest, bank FD. You have to compute his tax liability for AY 25-26 under default tax regime, means under 115 BAC. How to calculate? See, 0 to 3 lakh, no tax. 3 lakh to 6,50,000. What is 3 lakh to 6,50,000? It is 3,50,000. So on that 3,50,000, calculate at 5% because it is falling between 3 to 7 lakh. So what is that? 17,500. But don't forget, you will get a rebate under 87A. Rebate under 87A will be tax payable of 17,500 or yes 25,000, whichever is lower. So you will get 17,500 rebate and your tax liability will be nil. So this way, in this illustration, we could successfully cover rebate. Going ahead, next example. Okay, in this illustration, we will again cover concept of rebate, but along with one marginal relief in rebate. What happens? Your income just exceeds 7 lakh and you are paying tax under 115 BAC. So government says your income just exceeds 7 lakh. So government says no problem, we will give you a rebate. Okay, so how much rebate? So in step 1, you calculate how much exceeds 7 lakh. So just 15,000 exceeds 7 lakh. Because of this, you will not be denied rebate. You will get the rebate. Now, what's your tax payable on 7 lakh 15,000? As you all know, no tax on first 3 lakhs. 3 lakh to 7 lakh, you have got 4 lakh. On that 4 lakh, tax at 5%. That is 20,000. And friends, from 7 lakh to 10 lakh, there is this 15,000. On that 15,000, tax will be at what percent? On that 15,000, tax will be at 10%. So 1,500. Isn't it? Yes. So 21,500 is going to be your tax. But is there a need to pay that? Answer is no. Why no? Simple reason, you will get rebate. You will get rebate of 6,500. So why 6,500? See, this liability is greater than 15,000. So rebate will be of that 6,500. Clear? And your tax liability will be 15,000. So government, you can give that full 15,000 to government in short. So no need to pay 21,500 to government. You can pay only 15,000 to government and 6,500 will be rebate. Of course, then calculate health and education cess at 4%. You will get total tax liability. Okay, so this way, what can be covered? Your rates of income tax along with concept of rebate, surcharge can be covered successfully. And on the way, we have covered marginal relief as well. Clear? Marginal relief in surcharge also and in rebate also. So I hope you all followed it till this point. So friends, let's go ahead. Thank you so much, Accountant Wala. Yes, going ahead, income from salaries. Income from salaries, you know, one big amendment is there. What is that amendment? If my total income, whatever is my not total income, if I'm going for 115 BAC, if I'm going for 115 BAC, then the standard deduction has been changed. I will get a higher standard deduction. I will get a standard deduction of 75,000 rupees. Getting it? Yes, sir. So, it is contradictory. I always keep on telling you that, you know, tax incidence or tax would be lower, isn't it? Tax would be lower in case of 115 BSc. So, total income would be higher and tax rate would be lower. But yes, this is a exception. There are three places in which there is an exception. Government has given some additional deduction in 115 BSc so that more and more assessees can follow 115 BSc. So what is the standard deduction given? Usually standard deduction allowed is 50,000 under 16(1)(a). But in this case, it is allowed to the extent of 75,000. So if you are out of 115 BSc, it will be allowed to the extent of 50,000. If you are going in 115 BSc, it will be allowed to the extent of 75,000. Clear? Yes. Let's go ahead. Then friends, a big change which needs lot of understanding, that is in topic of PGBP under section 40B calculation of partners remuneration. Okay. So partners remuneration, you all know what type of limit is put up. That limit is depending on book profits. Okay. Now a higher amount is allowed. This amount has been increased. What they say, if you are having a loss, then also you will be allowed to the extent of 3 lakhs. Earlier, this was 1,50,000. Now it has become 3 lakhs. And then, if your book profits are positive and if it is up to 6 lakhs, then how much remuneration will be allowed? 90% of book profit or 3 lakh, whichever is higher. Clear? Earlier, this was 3 lakh and this was 150. Clear? And now on balance book profits, it will be at 60% of the book profits. So friends, we are going to do illustration, of course. On each and everything where calculation is involved, we are going to do illustration. Firm has paid 8,50,000 as remuneration to its partners. So can I say this is as per deed? Yes. Or this is the intention of the firm. But of course, allowed will be this or 40B ceiling limit, whichever is lower. Now, what is the book profit? Book profit is also given to you, that is 10 lakh. Just to revise in one moment, what is meaning of book profit? So book profit actually is PGBP, but before allowing partners remuneration. Okay, so it is 10 lakh rupees. On basis of 10 lakh, you calculate the limit. How will you calculate? 10 lakh means it is positive and it is exceeding 6 lakhs. So on first 6 lakh at 90%, check 540. What exceeds 6 lakhs? 4 lakhs exceeds. So 4 lakh into 60%, check, you are getting 240. Take total 780. So friends, allowed will be actual, which is 850. Actual, which is 850, or ceiling limit 780, whichever is lower. So friends, lower is 780. Can you allow 780? Yes. If 780 is allowed, doesn't that mean 70 is disallowed? And indirectly, doesn't that mean that your PGBP is what? 10 lakh minus 780? Because 10 lakh was book profit. Book profit means what? Book profit means PGBP. But before allowing partners, remuneration. So now allow the partners remuneration. You will get PGBP of the firm. So simple. So I hope you understood the amendment. Let's go ahead. Now comes the most awaited topic, capital gains. Okay. So can I discuss about capital gains? In capital gains, as far as classification of asset is concerned, okay, you know the criteria is for some assets 12 months, for some assets 24 months, for some assets 36 months. Now, for transfer taking place with effect from 23rd July 24, they want to remove 36 months criteria. Okay, so 12 months will continue if you are holding a asset for not more than 12 months. Which asset? You know, listed shares mainly. Then it is short term capital asset. And for other capital assets, it is if they are held for not more than 24 months. So let it be jewelry, land, building, unlisted shares. The criteria is going to be 24 months. Criteria of 36 months is removed. Is it clear? Now, after that, coming to rates of tax. Okay, most debated topic in India after that budget. Okay, after that budget in July was this rate of tax on capital gains. Okay, now why so? Why it was so critical? So I would like to tell you in detail here rates of tax in case of CG, in case of capital gains. Okay, now friends, there are two possibilities, two things I want to discuss with you. Okay, in case of listed shares, okay, in case of listed shares. So in case of listed shares, there are two possibilities. Yes, sir. They could be STCG or there could be LTCG. Yes, sir. This STCG is taxable under section 111A. LTCG is taxable under section 112A. Okay. This STCG, what they have done up to 23rd July 24, it was taxable, at 15% happily. Okay. And this up to 23rd July 24 was happily taxable at 10%. Now, with effect from 23rd July, they have changed. This 15 has become 20 and this 10 has become 12.5. Did you all understand? Only small relief in case of what? In case of LTCG. That relief is it is not taxable up to first rupees 1,25,000. Earlier this limit was 1 lakh. Earlier this limit was 1 lakh. So it has been increased. Clear? As we go ahead, now see other assets. For other assets, what will happen? Okay, that is also important. So for other assets, there are two possibilities again. There could be STCG or there could be LTCG. Now STCG actually no change. LTCG is interesting. STCG no change because it is taxable at normal rates. Normal rates means slabs for individuals, for firm flat 30% and so on. For LTCG use change, do you want to know that? Yes, sir. So for LTCG, what happens? So what are we discussing? We are discussing LTCG on other than which shares? On other than listed shares. We are discussing that. So in short, we are discussing LTCG under section 112 and not 112A. Clear? Now in this, what happens? Understand. This, there are two possibilities. Okay. Transfer is before. Transfer is before 23rd July 24. If transfer is before 23rd July 24, then you know it is taxable at what percent? 20%. Correct? And there is a benefit of indexation. There is a benefit of indexation. Agreed? If transfer takes place, if transfer takes place after, rather we should say on or after 23rd July 24, then what happens? Then something interesting happens. Two possibilities. Okay, I will write here any other case. I will write here any other case. Okay, so what actually government wants to do? Government wants to tax not at 20% but 12.5%. Whatever LTCG it is, they want to tax at 12.5%. Clear? So it is taxable at 12.5%, but friends, mind you, without indexation benefit. Without indexation benefit. You will see what happens when it is without indexation benefit. Clear? That is one thing. Secondly, now what are the other cases? I mean, what is the important case? Important case is transfer of land or building. What has been transferred? Transfer of land or building. By whom? Transfer of land or building by resident individual or HUF. So here government wants to give you some benefit. Government doesn't want that to be imposed on you. So what government is trying to do now? So they are now saying that how tax will be paid. Remember, 12.5% of long-term capital gains with indexation benefit. With indexation benefit. Is it clear to all of you? With indexation benefit. And this will be whichever is beneficial to the assessee. That means whichever is lower. Clear, all of you, how rates of tax are going to be there? So huge, what you can say, consideration is given for whom? For those assessees who are transferring land or building, and this transfer should be, of course, as you know, we are in the after. No need to tell you. Only one point, that even asset should have been purchased. The asset should have been purchased before. Asset should have been acquired before 23rd July 24. Okay, so this is what you have to understand. So government did not impose and government did not tell that pay tax at 12.5% without indexation benefit, but government has given option of taking indexation benefit and paying tax at a higher rate of 20%. Okay, so at this juncture, these rates of tax we have covered, and now let's go to illustration. Okay, very interesting illustration which will cover your LTCG and STCG on shares, listed shares. See, Mr. Mithun is there who has purchased 100 equity shares of Good Money Company Limited on 1st July 2007, means in 7-8, and they are equity shares of this company. 1000 is cost of acquisition in a public issue of a company by paying STT. Okay, company allotted bonus shares in ratio of 1:1. So friends, bonus are how much? Bonus are 1000 on 1st December 2023. He also received dividend of 10 per share. So now total shares he has is 2000. On 2000, dividend of 10 per share is received. Sorry, not 2000. He has 200 shares because earlier he had 100 and now 1:1. So yes, he has 200 shares. So on 200 shares, dividend of 10 per share, which makes it 2000 rupees. So 2000 is your dividend. Clear? Now, he has sold all the shares on 1/10/2024 for 4000 per share through recognized stock exchange, and brokerage is there of 1%. STT doesn't get any deduction. Okay, you have to compute his total income and tax liability. Of course, for 25-26, if he pays tax under default tax regime, means 115 BAC, assuming that he is having income from other sources of 8 lakhs. FMV of the shares of Good Money on 31st Jan 2018 was 2000. I hope all of you know that while calculating LTCG under 112A, where the shares were acquired before 1st Feb 2018, you are supposed to take FMV as COA, FMV as on 31st Jan 18. So anyways, I am going to show you the whole calculation now. Just focus here. 200 shares you have transferred. But I am going to break up that in 100 and 100. Why, sir? Because 100 shares are original and 100 shares are bonus. Yes, sir. So what happens? These are sold for 4000 per share. Agreed. These are also sold for 4000 per share. Agreed. So FVC we get is 4 lakh. Agreed. At both the places. Yes. Expense on transfer that we minus is also similar, 4000, because 1% of 4 lakh. Agreed, no? Now we get 396 at both the places. But remember one thing, in bonus shares, cost of acquisition is nil. So this whole 396 is your capital gain. And mind you, it is short-term capital gain. Why? Because you only check The bonus shares were allotted on 1/12/23. Did you see? Bonus shares were allotted on 1/12/23 and they were sold on 1/10/24. So 1/12/23 to 1/10/24 is up to 12 months, isn't it? It is not more than 12 months. So which gain it is? So it is short term capital gain of 3,96,000. Clear? And when I go for cost of acquisition in this original shares, it is 2,000 per share. So it comes to 2 lakh. I'll explain you how it is 2 lakh. So I get LTCG of 196. So why LTCG? Why LTCG? Because it is held for more than 12 months from date of acquisition till the date of its sale, isn't it? So 196. So what happens now? On this calculate. Now what happens? There is a IFOS also. As you know, there is IFOS of 2 lakh. No, not 2 lakh, 8 lakh given in the question. And there is a dividend of 2000. So total is 8 lakh 2000. So friends, take total of everything. 196 plus 396 plus 8 lakh 2000. You get 13 lakh 94,000 as the total income. Now on this 13 lakh 94,000, you have to calculate tax liability. 1394 has three parts. Yes, sir. LTCG under section 112A, STCG under section 111A, and you have other income. Other income will be taxed as per 115 BAC. As simple as that. How will you calculate it? LTCG is 196. From 196, as we discussed, you will minus 125. We discussed now while discussing rate of tax that not taxable on first what 1,25,000. So take 196 minus 125. You are going to get 71,000. Here 111A you will get 396. Yes, sir. So on this 71,000, calculate tax at 12.5%. So why 12.5%? Because the transfer is taking place on or after 23rd July 2024. So 71,000 into 12.5%. Am I getting 8875? Yes, sir. And on 396, pay tax at 20%. What is 396 into 20%? It is 79,200. So far so good. And now friends, calculate on 8,02,000 as per slabs. What slabs? 115 BAC slabs. 0 to 3 no tax. 3 to 7 lakhs, you know 20,000. You are expert now in that. 7 lakh to 10 lakh. 7 lakh to 10 lakh. How much you have? Between 7 lakh to 10 lakh. You have 8 lakh 2,000 minus 7 lakh. That is 1 lakh 2,000. That 1 lakh 2,000 into 10%. What is 1 lakh 2,000 into 10%? It is 10,200. Can you take total? Total is 30,200. Friends, take total of these three. That's your final tax. So 30,200 plus 79,200 plus 8875, 1,18,275 is your final tax. Add 4% health and education cess. So isn't it 4731? Are you getting final answer as 1,23,006? Rounded off to nearest of 10, it's going to be 1,23,010. Is it 100% clear to all of you? So that's how it was supposed to be done. You might have one doubt, which is very obvious, that how did we get COA of 2 lakhs? Yes, how many of you have that doubt? It's very valid doubt. How did I get COA of 2 lakh? How did I get COA in case of LTCG under section 112A? So it's simple actually. What you have to do, you have to go ahead and tell me what was the original cost of acquisition. Now original cost of acquisition was only 1,000, and okay, this has to be compared with FMV as on 31st Jan 2018. This FMV as on 31st Jan 2018 was 2000. But anyways, this FMV cannot exceed FVC. It cannot exceed FVC as on, means FVC means full value of consideration, means sale price, that is 4,000. In short, of this two, you will take whichever is lower. So you got 2,000 from this. So now you will take higher of 1,000 and 2,000. So therefore, COA is taken as 2,000. And anyways, here indexation benefit is not allowed. Therefore, total COA came to 2,000 into 100. How many shares? 100 shares. 2,000 into 100 shares comes to 2 lakh. That's how you got 2 lakhs. I hope it's absolutely clear to all of you. So, sir, for telling us amendments, why have you covered such sums? Because, friends, my whole lookout was not only amendments but also revision of good concepts and good questions. Okay, so always we do highest level of things. Clear, all of you? I want to ask you one thing. Have you subscribed to the channel and have you hit the bell icon? And have you liked the video? And have you shared it with your friends? Because I'm quite sure you're enjoying it. Yes, sir. Let's go ahead. Now, next illustration to explain you calculation of tax liability when individual who is resident sells his HP, okay, or sells his land. So there's a HP in this question, which was acquired on Feb 15, 1979. That is before 1st April 2001. So what COA will you take? Original COA 324 or FMV as on 1/4/2001, whichever is higher. Okay. In addition, he also paid stamp duty value at 10% of stamp duty value. So in short, stamp duty paid is 35,000. So original COA becomes 3,59,000. Clear all of you? Now, in April 8, he entered into agreement with Mr. Mohan for sale of such property for 14,35,000. In April 8 we are talking about. And received 1,11,000 as advance. But sale did not materialize and Shiva forfeited the advance. Friends, do you remember when such advances forfeited, it gets subtracted from COA because it has happened before 1st April 2014. Yes. In May 15, he again entered into agreement. Now this is in May 15. That is on or after 1st April 2014. He entered into agreement for sale of house with Dipshika and received 151 as advance. However, as Dipshika did not pay the balance amount, Shiva again forfeited the advance. So friends, this 151 now will become taxable under their income from other sources. I hope you know this point. On November 15, 24, he entered into agreement with Manish for sale of such house for 30 lakh 50,000. Congratulations. Now finally, in 24-25, you are selling the house for 30 lakh 50,000. 150 you have received an advance, that also through account pay check. So very good. So 15 November 24 is very valid date. Do you see it is on or after 23rd July 24? So there are two options open. You may take benefit of indexation and pay tax at 20%, that is higher rate, or you may not take benefit of indexation and pay tax at lower rate. Okay. Mr. Manish paid the balance entire sum and Shiva transferred the house to Manish on Feb 2025. Shiva paid brokerage at 1% of sale consideration. Okay, so yes, 30 lakh 50,000 into 1%. 30,500 is expense on transfer. It is expense on transfer. On 1st April 2001, FMV of the house was 11 lakh 85,000. Clear? And stamp duty value was 10 lakh 70,000. In short, this is given to you so that you can find out cost of acquisition. Further, value as per stamp duty authority on 15 November 24 was 39 lakhs. So, for FVC also, you have to consider stamp duty value provided it is greater than 110% of actual consideration. I hope you know this. 20th Feb 25 stamp duty value is immaterial because on 15 November we have fixed the consideration. Okay. Now friends, let me explain you all the points step by step. Okay. See. First point. What is your FVC? Simple. Your FVC will be what? Stamp duty value. If it is greater than 110% of actual consideration. You have just now seen your stamp duty value is 39 lakhs. So 39 lakhs, as you can see, is greater than 110% of 30 lakh 50,000. You can check 30 lakh 50,000 into 110%. 33 lakh 55,000. So what government says? Government says if your stamp duty value is so high that it is overtaking 110% of actual consideration, then we don't believe in your actual consideration. Then forget your actual consideration. Your FVC will itself be stamp duty value. So 39 lakhs. From that, less expense on transfer. We know expense on transfer, we just calculated 30,500. Don't forget, that is 1% of sale consideration. Okay, and this FVC we have calculated as per 50C. Now, from 39 lakhs, when you minus 30,500, you are getting 38 lakh 69,500 as what? You are getting this as your net sale consideration. Clear? Now from this, you minus cost of acquisition. For a moment, assume you are going to pay tax at 12.5% without benefit of indexation. So what's your cost of acquisition? Now your asset was acquired prior to 1/4/2001. Hence all these things. Your original COA, as you can see, is 3,59,000. I explained you. You will take 359 or FMV as on 1/4/2001, which you know is how much? Which is, check, 11,85,000, which is 11,85,000. Okay, but it cannot exceed SDV as on 1/4/2001, which is 10,70,000. So in short, you will take lower of these two, which is of course 10,70,000. So now your COA will be 10,70,000. But don't forget, from that you have to minus advance received and forfeited prior to 1st April 2014. Don't forget, that is 1,11,000. So finally, your cost of acquisition is 9,59,000. Subtract it. And don't forget, you have done some improvement also. So there is an improvement done. Check, I'll show you. It's hiding here. In August 15, he constructed first floor by incurring 3,90,000. So don't forget, there is a COI also, which is 3,90,000. So now you get your LTCG, and that too without benefit of indexation. No indexation you have taken. Can you tell me what is your LTCG without indexation? 38,69,500 less 9,59,000 less 3,90,000. You are getting, friends, 25,20,500. Friends, on this you will pay tax at 12.5%. So what is that? It is 3,15,063. Agreed? But this is not compulsory for you. What you can do, you can go for benefit of indexation. If you want to go for benefit of indexation, see, we'll do the calculation. NSC is 38,69,500. That will remain same. Yes, sir. That will remain same. Less ICOA. You know what is COA? Your COA is 9,59,000. So you will do 9,59,000 into 363, which you know is what? Which is your CII for the PY in which asset is transferred, divided by 100. 9,59,000 into 363 divided by 100. Are you getting 34 lakh 81,170. Yes, sir. And index cost of improvement. Don't forget 3,90,000 is your improvement multiplied by 363 upon CII for August 15 it was improved. So 1516, which is 254. So upon 254. What is that? Are you getting 6,08,031? I checked. I'm getting 6,08,031. So friends, what is your LTCG? But I'm getting a doubt. There is a LTCL, long term capital loss. So 38,69,500 minus 34,81,170 minus 6,08,031. Friends, actually 2,19,701 is the long term capital loss. Okay, some mistake we have done. 3,90,000 into 263, sorry, into 363 divided by 254. Sorry, this you are getting something else. I did calculation mistake. This you are getting as 5,57,362. So your LTCL will be different. Check. Anyways, that LTCL has got no meaning. Why it has got no meaning? So 38,69,500 minus 34,81,170 minus 5,57,362. Loss is 1,69,032. This has got no meaning. Why no meaning? Because anyways it cannot be carried forward and tax liability will be zero. So believe me, in given case, the option of taking indexation is better. Clear? The option of going with indexation benefit is better. Clear? Yes. So this way you have to compare when the asset is transferred, which is a house or a land, and which is transferred by resident individual or HUF, and which is transferred on or after 23rd July 2024. Clear? Yes, and no implication of that loss because that calculation was done only for determining tax liability. So this loss has got no implication. But anyways, tax liability is zero. That is important for me. So I hope friends you have followed this well. You can easily go through the ideal solution that I have given you. Now, majority of the amendments we have covered. Okay. In IFOS, there is one amazing amendment. Okay. And you may not like that amendment, but anyways, you have to understand it. If so, I hope capital gains amendments, all of you have understood. We have dedicated 70 minutes till now for this session of amendments. So let's go ahead. If shares are bought back, then friends, if this transaction was happening till 30 September 24, then company itself used to pay tax on buyback of these shares. So means what? Means you are having some shares of company buys back that shares. So actually friends, it is your income because company would buy back at much higher price. So it's your income. So you should pay the tax. But the tax was shifted in the hands of company. Under 115 QA, company used to pay tax at 20% plus 12% surcharge. plus 4% health and education cess. And that used to be exempt in the hands of shareholders. But now, what is the position? Now, what is the position on or after 1st October 24th? Position is different. Very different. Now, the amount, entire amount that you are getting on buyback of shares gets taxed under the head income from other sources. Clear, all of you? And that is taxable as deemed dividend under section 222F. I'll show you example. Suppose you have, as a Mr. B, you have 100 shares, okay, which were bought by you at 40 per share. So your total cost of acquisition was 4,000. Now, company bought back 20 shares at 60 per share. So friends, 16 to 20, entire 1200 will become taxable in your hands under the head IFOS. Okay, under the head IFOS, under section 222F. You will not get deduction of that 40 rupees per share. Actually, that's what you had paid to buy these shares. And now you're getting 60 rupees from the company. Company is taking your shares, giving you 60 rupees per share. Full 60 rupees into 20 shares will be taxed. But don't worry, that 40 rupees per share which you had, which is your buying price, that will be a loss of 800 under income tax. Which loss? In this example, long term capital loss. In future, when you have any long term capital gain, then that long term capital loss can be set off. Like in this example, in future, I had some remaining shares. See, totally I had bought 100 shares. Out of 120 were given away in the scheme of buyback. 70 I had. Out of 70, I have sold 50. I have sold 50 for 70 per share. So I got how much? So I got 70 rupees into 50 as FVC. From that, this cost of acquisition I subtracted 40 into 50. 40 was original buying price. So I got 1500 rupees LTCG. But I had LTCL of 800 rupees, which I set off, and I pay tax on 700 rupees. So this is what happens. Mainly, what I have to understand is whatever amount I receive on buyback gets taxed under the head IFOS. Going ahead, I told you at 3 places they have given you higher deduction in 115 BAC. Now one more place is this family pension. You would remember that family pension gets a deduction of 1/3 of family pension or 15,000, whichever is lower. This limit of 15 has been increased to 25. But remember, only if you are in 115 BAC. If you are out of 115 BAC, this limit continues to be rupees 15,000. Clear, all of you? So yes, example also I have given you. There is one assessee. She is getting family pension of 20,000 per month. So in short, she is getting family pension of 2,40,000. Okay, if she is paying tax in 115 BAC, how much deduction she will get? So calculate 1/3 of this 240, which is 80. So 80 or 25, whichever is lower, so she will get deduction of 25. Taxable will be 2,15,000. Clear? And friends, when he is paying tax opting out of 115 BSc, then the deduction will be how much? Then the deduction will be 15,000. So 225 will be taxable. Clear? Now, one more place where deduction is higher if you are in 115 BAC. 80 CCD2 deduction means employee is contributing to NPS, new pension scheme. So friends, that first forms part of GTI. It's a perquisite. It first forms part of GTI. Then deduction is given under 80 CCD2, and this deduction is given in both. What both? If you are in 115 BSc also it is given. If you are out of 115 BSc also it is given. So that's what I'm telling you. If you are in 115 BSc, you will get it as deduction to the extent of 14% of salary. If you are out of 115 BSc, it is only 10% of salary. Okay, and no, don't worry, government employee always get 14% of salary. Government employee always get 14% of salary. This was discussion for other than government employee. Clear? Salary is basic plus DA terms of employment plus commission percentage of sales. Clear? So I hope friends you have got all the amendments till this point. Going ahead to the last set of amendments, that is in the topic of TDS. So discussing with you the most important one, that is the change in rate of TDS. So at many places rates of TDS have gone down with effect from 1st October 2024. On insurance payment, it has become 2%. On commission on sale of lottery tickets, commission on brokerage of 194H, rent paid by individuals HOF not covered in tax audit, that is 194 IB, that is per month rent more than 50,000. There, in that case, it has gone down to 2%. 194M means heavy payments by individual towards commission, brokerage, personal payments, where the threshold limit is 50 lakhs. In that cases, 2%. And TDS on e-commerce transaction has gone down to 0.1%. So wherever deduction has to be done on or after 1st October 24, you do with this lower rates of TDS. Clear? So friends, I am quite sure that you have followed all the amendments well. So yes, I did cover bit higher level questions because I believe that when you do that, you become empowered to solve any type of question and understand any type of thing in tax, and you build a lot in confidence. So friends, thank you so much for being such wonderful audience. Stay tuned to our channel. Do subscribe to the channel. Do hit the bell icon so that you do not miss out on any important video and notification. Friends, this is our 1 point contact number for all the doubts, inquiries, okay, and admissions. It's 9028777829. You can WhatsApp on this number at any point of time. Thank you so much. I'll see you in further sessions. Till then, keep smiling, keep studying, stay blessed, and arise, awake, and stop not till your goal is reached. I, CA Pratik Neve, is signing off from today's session. Bye bye. Take care.